Hello, friends. Welcome to this special episode of Momentum Misfits. So, this is a series that we do where we try to identify stocks with lower momentum scores and share them with you so that you can review. If you are holding these stocks, you can review your decisions because from our perspective, nobody should be holding a lower momentum score stocks. They are essentially likely to bleed your portfolio, and once you go deeper into that hole, it's very difficult to come back up. Maybe you already have reached that bottom, but nevertheless, it is a great learning for the future in case the most of the damage is already done for the stocks that have bleeded your bled your portfolio. So uh, the idea is to understand the importance of staying away from weak stocks, knowing when to exit a stock, sticking to the strength at all times, because you don't want to go through the pain of huge losses, holding underperforming stocks, having loss of opportunity for your capital, and just regrets that why did I not sell? Why did I not sell the entire amount? There was opportunity to sell and so on and so forth. So the agenda for this episode is to discuss charts of three stocks with currently lowest momentum score in different categories of large, mid, and small cap space. Now, how to read the momentum score? So this is a proprietary score that we do. Uh, and let's look at large cap stocks 1 to 100. The momentum score is basically relative to other stocks in that space. So if we are looking at top 100 stocks, we are doing a ranking of these stocks. So the lower ranked stocks are likely to be doing really badly. But there could be a situation in the market where the entire market has gone down and even the top stocks are not really positive in terms of absolute numbers, but relative to the ranking, they're in the top ranks in terms of relative strength. So you always want to stay with the strength in the market, even if on absolute basis it may not be such great strength, because that is probably uh, that segment of the relative strength is which are the ones which may take off once the market does start to go up, or in case there is a churn at that point of time when the market starts to take off, you will be able to churn into the new leaders, so as to say. So the first large cap that is on our momentum score of 3 is Adani and Sol. This stock was doing really well from 2020 till 2022 August, September. And then, of course, there was a fall right here from 4,400 till about 2,600. So most strategies either would have gotten out here, maybe would have gotten in here again, but certainly in this fall, even before this February 23 Hindenburg fall that happened, you would have gotten out of the stock right here based on momentum. So a lot of pain would have been sort of saved if you had gotten out here, or even if you got out here, uh, you would have at least last 2 years, your capital would have been free to do other things. So this is something that is there. Of course, right now it does seem like it is at some support. So from a chartical perspective, if stock starts to go below 600, I think it becomes a real killer on this front. Bajaj Housing Finance, another stock that has uh, just been going downhill on this front. The the uh, current price is 113, down from 190. The stock was listed recently with a lot of fanfare just in September of 2024, and the way it has come off is amazing. It is at a momentum score of 4. Certainly a stock to not be near it. Uh, Adani Enterprise continues to be another large cap, which is down 42%, momentum score of 5. Here again, after the amazing rally, and here you would have really, benefited from this rally. It was a sort of a almost like a fantastic no correction rally, and then in this fall, the February 23 fall, somewhere you could have gotten out and made decent amount of money. Even if you gotten out later in this fall, you would have made a lot of money here and not have had to uh, spend time here, although uh, the momentum score here would have crashed right here itself. But even now, after this significant jump from 1,000 rupees again to towards 3,000 and then down to 2,300, momentum score remains really low. So avoid on this as well for now. If we compare in the last 12 months, these three stocks, Adani is down 19, Adani Ensol is down 25, Bajaj is down 31%, and compare it with other general large cap index of CNX 100, which is up nearly 10%. And then there are stocks within this space, the large cap space, which have gone up 170%, 97%, 76%. So these are the strongest stocks in this 100 uh, uh, large cap space, and these have been amongst the weakest stocks. So you can see that how the stronger stocks are from the very beginning of the year taking lead, and switching to them at that point would have made much more sense in terms of the final outcome. So the point remains, and the reason why I'm not naming the stronger stocks is, uh, whatever may be those stocks, the idea is to showcase that there are few stocks in every index that you are watching, which are the real strength of that index, and you need to be in those stocks and not be in the weakest stocks of the market. So if we just compare the top 10 versus bottom 10 on the large cap space, then you will see 1 year returns of the bottom 10 right here uh, at -30 to -3% change. I'm not sure why we haven't included the HFL. Maybe this is a recently listed and hence we don't have too much data on this. But on the other hand, you can see the momentum score here for the bottom 10 stocks was 1 to 10. And for the top stocks, you have momentum score of 91 to 100. So these are the top stocks, absolutely. And 1 year returns on these stocks have been fantastic. 6 month returns and 3 month returns. 3 months have been negative on some counters, but if you will see that most of the time, these stocks have done really well over a period of time. So that is where you would want to be ideally. Mid cap space is the 101 to 250th stocks. And here we have the first stock is again Adani Total Gas, which is down 82% from the top. Adani Total Gas again would have given you a nice ride here as well as a ride here, and you would have possibly gotten out somewhere in this fall. Uh, this has not moved for the last 2 years, and you would have saved an opportunity cost here. So current drawdown is 82% from the top on this stock. Yes Bank is another mid cap stock that is down in terms of momentum score. The current drawdown is 95%. Let me just, yeah. And the fall from 480 in 2019 has virtually no attempt has been made to recover any significant part of this fall. We've just gone from 10 rupees to 25, 30 at once, and then now we're back at 18. So momentum score is really poor here. The idea that this stock should be there in your portfolio is not a good idea from this perspective. Tata Tech is another stock which is momentum score of 3. Current drawdown is 42%. You can see that from its date of listing, it has never really made any attempt to go higher. So this should not be a candidate for your portfolio. Again, these stocks have lost 26 to 32% in this last 1 year. And there are mid caps which have done 199%, 163%, 146% in the last 12 months, whereas overall mid cap index itself is up 16%. So you can see what is the major sort of debacle that has happened because of these stocks in your portfolio. So the poorest 10 stocks: Idea, IndusInd Bank, ATGL, Yes Bank, Tata Tech, Astral, IDFC First, Niasel, IRCTC, Bank of India. These have been the poorest momentum score mid cap stocks, and the top 10 stocks have done really well. And you can see that 1 year returns on the top 10 stocks is almost 3 digits for all of them. So if you had some of these stocks in your portfolio versus some of those, you would have really the portfolio outcome would have been very different. And that's what momentum portfolios would attempt to do. In the small cap space, from 251 to 500, you had Vertos, which is down 71% from the top. Momentum score is nearly zero on this. You have J Corp, which is hurtling down virtually zero here, as also 88% on this. And you also have Spandana Spurti, which is down 75% here also. There is no pickup at all in this last 1 year or so. So again, you are losing 60 to 70% on these three stocks in the small cap space. 16% is the small cap 250 index for the last 12 months. And there are few stocks that have done 700%, 600%, and the third one is 55% on at the best uh, potential point. So why should be on alert? Because holding on to weak stocks not only erodes your capital, it prevents you from riding better opportunities. And I think more than that, it erodes your confidence. When you are saddled with losing stocks, you tend to, have lower and lower confidence on your stock picking ability. And if that continues in subsequent cycles, I bought this, it fell down, I bought this, it fell down, I bought this, it fell down. After three times, you may say, I don't think I can do stock picking, and that is something that you don't want to do. Now, the momentum strategy, of course, attempts to stay with the strength in the market, so it automatically identifies higher momentum stocks. It quickly discards momentum where it is fading. So within it 100 basket, if 20 stocks are performing, you would want to be amongst those 20 stocks and not the 20 stocks that are really fading. How healthy is your portfolio? You can do a check. What percentage of your stocks are in strong momentum or in weak momentum? Is your portfolio overly concentrated? Is your portfolio well diversified? You can do all this check with the momentum report. You can get this report from our website for free. You can scan this QR code, it will take you to the report page, and all these metrics are available to you. So that's all I have for this video. I hope you're liking this series. I'll certainly look for your feedback to help improve this and go forward with this in the future. Thank you so much. Bye bye.